Well, welcome everyone to the Kimberlite webinar to take a comprehensive look at the perforating and completion fluids market. My name is David Batt, and I'm the president of Kimberlite Research, and I'm glad that you're able to join us today. This is the 23rd presentation in the Kimberlite webinar series that we've hosted on behalf of the oil and gas operators who participate in our industry research. Our past webinars have included many of the oilfield products and services that you commonly use, such as hydraulic fracturing, directional drilling services, formation evaluation services, as well as cementing services and surface wellheads. We've also taken deep dives into the Permian Basin. Just last month, we took a deep dive into artificial lift and the production chemicals market. Let us know if any of your colleagues need access to these previous webinars, and to send us an email or chat message, and we'll make sure you have access to this information. Today, we'll be taking a deep dive into the perforating market and completion fluids market. We'll provide some key trends on use of integrated guns and how the various suppliers stack up versus one another in terms of performance and technology. Feel free to submit questions during the presentation today in the chat box, and we'll try to address your questions during the presentation. For those of you that are not that familiar with Kimberlite Research, I will provide a very brief background of what we do and then dive right into the perforating and completions market review. Each year, Kimberlite conducts about 3,000 one-on-one interviews, typically through phone interviews, with about 3,000 users globally. About half of our research is North America, about half is international. Some of you on the phone or on the webinar with us today may have participated in our past industry studies, and for that I say thank you. We are currently conducting interviews for cementing services and for surface wellheads, so if you or one of your colleagues are active users of these oilfield services, let us know. We'd be glad to reach out to you and include you in our research. These interviews will be taking place November, December, and that report will come out in January. From the 3,000 interviews each year that we provide and that we conduct, we produce a series of reports addressing formation evaluation like LWD and wireline logging and mud logging, drilling services such as rotary steerables, mud motors, and MWD, completion services, production, and subsea. Today, like I talked about, we'll be covering the perforating market and completion fluids market. This information I'll be sharing with you today is based on interviews, most recently in the last few months with 262 completion managers and engineers from over 160 different E&P operating companies. Some of the performance trends that I'll be sharing with you today from 2017 through 2022 are based on the interviews of nearly 2,000 users of these services over the last 6 years and comprised of over 40,000 supplier performance ratings. The data set that we use is fairly rich and multidimensional. We'll be using this quadrant map or value map quite a bit today. On the x-axis, we plot supplier performance, and on the y-axis, we plot perceived pricing. The top right-hand quadrant is the quadrant any suppliers in this top right-hand quadrant are viewed as more of a premium supplier. They perform better than industry average. They may charge prices higher than industry norm, but they cost more, but they're worth it. The fair value fairway runs diagonally to the southwest quadrant, which is the discount quadrant, where suppliers in this quadrant do not perform as well. They perform below industry average, but they offer attractive pricing, so you get what you pay for. The bottom right-hand quadrant is value advantaged. Obviously, as an oil company, you're trying to select suppliers that can at least meet industry average performance levels and be at least on the right-hand side of this x-axis. Can either be value advantaged or in the premium quadrant. Any oilfield service company suppliers that plot in the top left-hand quadrant, based on the feedback from the users and the oil companies, suppliers in this quadrant are really disadvantaged, and they really need to put together a performance improvement plan to better align their value proposition in terms of their pricing strategies and their performance profiles. So with that, we'll dive in. Please feel free to ask questions or in the chat session as well. Well, I think to kick things off, I think the first thing we want to take a look at is the macro. When you take a look across the globe, on a global worldwide basis, 73% of the operators globally indicate that they plan to increase their expenditures for perforating over the next 12 months versus the prior 12 months. You can see about another 23% of operators globally are planning to keep their expenditure levels relatively unchanged, only 4% expecting to decline. When you look at it across U.S. land, Canada, international, and offshore, you see kind of a globally coordinated investment upcycle taking place. The diffusion index is high. It's sitting in the high 80s. You can see how volatile this market has been, where diffusion indices below 50 indicate economic contraction, and we went into contraction mode, a deep contraction mode, particularly in Canada during the COVID years, and now we since have very strongly increased here and moving into 2022. You can also see how drilling services is by far the most volatile. Artificial lift and production services in red is the least volatile because production solutions are needed both in good times and bad times. But when drilling rigs get cut from 800 drilling rigs down to 200 drilling rigs, or frac crews get cut from 300 frac crews down to 40 or 50 frac crews, you can just see how cyclical some of these segments are, and all the ramifications that come with that. When you look ahead to 2023, what we find is that operators in United States land are planning to drill 17.1% more wells in 23 versus 22, led by the Permian Basin at 20.8%. Non-Permian Basin, U.S. land basins are projecting to drill about 14.9% more wells in 23 versus 22. On the macro level, you can see international and offshore are also projecting double-digit growth in the number of wells to be drilled. This globally coordinated upcycle and investment is a result of these elevated oil prices and the demand and call for barrels. It's been quite some time that we've seen a globally coordinated upcycle where you've got both international and offshore going up in double-digit rates, as well as U.S. land. From an operator perspective, this will continue to strain the oilfield service company suppliers' capacity in terms of equipment and competent people to recruit, train, and retain into the industry. I highly encourage the oil companies to work as collaboratively as they can with their service companies to ensure that you have access to the services that you need to meet your operational programs for 2023. Keep in mind, 2022 in the United States land was a year in which we're drilling close to 40% more wells this year than we did previous. No one really expected that we would drill this many more wells in 22 versus 21, but due to the elevated oil prices and policies that are in place, you can see that there was a need for barrels. The private operators really stepped up to the plate this year in the United States land, really picked up rigs and picked up their drilling pace. So, thank you for that. It's envisioned going into 2023, some of the public operators will keep a more of a sustained investment cycle, where some of the privates will continue to monitor prices and be far more responsive to market and pricing signals. One of the observations that has been impacting the market is that, we picked up with drilling rigs, about 180 to almost 200 drilling rigs in 2022, but we only picked up about 20, 30 frac crews. And so this spread here is creating drilled but uncompleted wells beginning to build at the tune of about 200 to 300 wells per month in the United States land. When we ask the oil and gas operators where they'd like to see desired improvements in perforating technology, it's an open-ended question, and the operators around the world are free to mention whatever they would like. But on a global basis, deeper penetration and fewer misfires are the number one comments that are cited by the oil and gas operators. However, when you break this out between North America land and international, say, versus offshore, you do start to see some distinctions. Like in the offshore environment, deeper penetration certainly rates at the top of the list. When you get into North America land, what you find is a lot of the comments for improvements for the oilfield service providers to improve upon is fewer misfires, more reliable tools, and just consistent performance. Not just tools, but also crews and competency, because if you're doing 50-stage frac, if you happen to, if you're off by 1,000 feet, you could lose about 4 or 5 stages. Then you have to go back in and try to modify your frac program if there's a human error involved. And so we do see some distinctions here between North America land international land and offshore. Kind of turning towards the perforating and integrated guns, and shaped charges, what we're finding is some trends to where the guns per stage are increasing and the shots per gun are decreasing. So if you take a look at this chart on the Permian Basin on the right-hand side is a good example. You can see that the number of guns per stage have been increasing from 2019 to 2022 from about 8 to 11. The number of shots per gun, however, has been kind of decreasing from about nearly 5 shots per gun in 19 down to 4 shots per gun on average of 3.9 shots per gun in 2022. Other trends that we're seeing is the average number of intervals or stages perforating have been increasing. This is because the length of the laterals in the United States have been increasing and the number of stages are increasing. And then the average length to perforate is hovering around 200 feet in North America land, whereas international and offshore is more in the 50 to 60 foot interval. As a consequence of drilling longer laterals and more stages, if you take a look at the total number of guns per well and the total number of shots per well, they're both increasing. Take a look at what's going on with the integrated guns. You can see that in North America land, if you go back to 2019, only about 56% of the guns were the integrated gun systems. You fast forward to 2022, and we're up to 83% of the gun systems used in perforating or integrated gun systems. International land is also increasing internationally, but at a slightly slower pace, clearly. We've doubled from 10% in 2019 all the way up to now 29% in 2022. So we're seeing an increase in use and adoption of integrated guns. The key drivers principally for it are for speed, efficiency, and safety. Reduce the chance of human error, performance, and also reliability. Operators that prefer to use conventional gun systems, it's largely due just to familiarity and experience is what they're comfortable with using, and obviously lower price. In terms of the forward view of the use of integrated guns, about 32% of the North America land operators report to us in this survey that they plan to further increase their use of integrated guns, whereas the international land market may start to flatten out a little bit, as all the operators that we talked to in the international land market basically indicated that they plan to kind of keep their use of integrated guns at current levels. When you take a look at the size of the integrated gun market and shaped charge market, I know there's a lot of data on this slide, but in the top left-hand portion, before COVID in 2019, the market was about $1.3 billion in size, of which the integrated gun systems comprised about 68% of the market. Fast forward to 2022 in the bottom right-hand side of the market, and the market size has recovered to pre-COVID levels effectively, but now the integrated gun systems now comprise 85% of the market. So you can just see the growth and the trajectory, if you will, of the integrated gun systems here. I think in terms of when we start to take a look at what suppliers stand out in our customer research as leaders for perforating guns and shaped charges, what we find is for shaped charges, about a third of the North America land operators, when asked who's their preferred supplier for shaped charges, and these are for the people who like to specify the shaped charges, we find that Hunting Titan and Geodynamics are mentioned by about a third of the operators. Core Lab is mentioned by about 17% of the operators, and you can see that the leadership of the awareness, if you will, of Core Lab, Owen, if you will, has really declined from about 32% in 2020 down to about 17% in 2022. DynaEnergetics is about at a 10, and you start to see other perforating suppliers such as GR Energy, even though they certainly don't manufacture their own shaped charges, are being associated with being a leader in providing good shaped charges and becoming a preferred supplier for shaped charges for many of the operators in North America land. Internationally and offshore, it's fairly dominated by Schlumberger, followed by Halliburton. When you look at the integrated gun systems, what you find is that The preference for geodynamics has been increasing from 2020 down to 2022. And hunting has been holding steady, kind of in the 20% range. Corlab and Owens has been in the teens, and DynaEnergetics has shown a little bit of a decline in terms of preference. But you start to see some of these other suppliers, like GR Energy and others, that are starting to be cited and mentioned, whereas internationally, Schlumberger and Halliburton tend to lead. Schlumberger has a clear dominance over Halliburton in terms of being the preferred shaped charge provider and the preferred gun supplier in the international and offshore arena. It's important to keep in mind that in North America land, the market's almost split 50-50. About 50% of the time, or 45% in this particular chart, you'll find that the oil company likes to play an active collaborative role, if you will, in selecting which shaped charge and perforating gun to use. Whereas about the other half, or 55% of the time, as you see here in this chart, the oil and gas operator will defer to the service company. Be that service company be a GR Energy or a 9 Energy or a Surefire or whomever, they'll let that service provider show up on site and bring the guns and shaped charges that they recommend for the job. Shifting gears a little bit, we do track the market and brand image of the suppliers based on actual customer reviews, but we also capture the broader market and brand image and perception as well. So when we ask the oil and gas operators who do they associate as a leader on various performance measures when it relates to perforating, like who do you associate as a leader in perforating technology or perforating modeling software, or the leader for wireline perforating, or being the best gun provider? Who do you associate as being a low-cost provider or cost more money but worth it? What you find here is Schlumberger has a very strong brand image. When you see these positive correlations that extend beyond the 0% line, which is the normalized line, you find that Schlumberger's image on most of these performance measures is quite strong and extends beyond their customer base. So Schlumberger has this image of costing more money but being worth it. You'll see in the customer reviews here in a moment, sometimes Schlumberger actually lives up to that image and they cost more and they are worth it. In other areas, they may just cost more and may or may not be worth it based on the customer reviews that we receive. Schlumberger has a strong negative variance here on being a low-cost provider. That's because Schlumberger is not viewed as being a low-cost provider. This negative correlation means that not even Schlumberger's own customers associate Schlumberger as being a low-cost provider. If you take a look at some other suppliers like Halliburton, for example, keep in mind the 0% line indicates that the image for this particular supplier, in this case Halliburton, is in alignment with their customer base. So keep a focus on the 0% line. What you see is Halliburton's image for technology leadership has been declining from 2020 to 22, also for perforating modeling software. Being a leader in wireline perforating has always been an area where Halliburton carries a brand image deficit in the eyes and the minds of the oil and gas operators globally. They tend to rate and view a little bit more positively for tubing conveyed perforating. And you can also see that Halliburton's not necessarily viewed as being a low-cost provider or a cost more but worth it supplier, indicating that Halliburton has an inconsistency in their pricing strategies globally. There's not a very consistent approach to the market when it comes to pricing for Halliburton, based on the feedback that we receive from the oil and gas operators globally. If you take a look at Baker Hughes, you can see that Baker Hughes' most strongest brand association is being a low-cost discount provider, and that they have some fairly strong negative correlations for software, for tubing conveyed, best gun, best shaped charge provider, and for being a cost more but worth it supplier. Their image for technology leadership is kind of starting to converge in towards the 0% line, indicating that it's getting closer and closer alignment to the customer base. But certainly not a very strong brand image for Baker Hughes as it relates to leadership in the perforating segment. Weatherford also shares a strong negative brand image when it relates to perforating. Weatherford's image has been normalized to international land where they currently have a presence. The strongest image for Weatherford is for being a discount provider, a low-cost provider, and also for tubing conveyed perforating. Those are the two areas of strength for Weatherford in the eyes and the minds of the oil and gas operators. Weatherford has a negative brand image, or a brand image deficit, if you will, as it relates to perforating technology leadership and modeling software. If you look in North America land at some of the secondary providers, you start to see companies like GR Energy and Halliburton actually start to kind of show up fairly favorably for technology leadership and software, whereas NexTier and Nine Energy sometimes have brand deficits. If you normalize international land, you can see what leadership role Schlumberger has over, say, Baker Hughes, and then Weatherford, and to a lesser degree, Halliburton. And you also see this in the offshore market, where Schlumberger stands out with leadership. Halliburton's image is about in alignment with their customer base that goes positive for tubing conveyed, and then Baker has some brand image deficits. With that, let's just dive right into the performance measures for and customer feedback for wireline perforating. Take a look at what suppliers are being used for wireline perforating in North America land. What we find is there's a total of 42 different suppliers cited as being used in North America land. So it's a very fragmented market. The good news for the oil and gas operators, however, is you've got many choices to choose from. However, when you move into the Permian Basin, it's down to 26 suppliers. When we take a look at the performance review ratings that we receive for the suppliers that are being used in perforating, what we find is that based on the feedback from the users, i.e. you, the oil and gas operators, not all wireline perforating service suppliers are performing at the same level. You know, we capture performance ratings on a scale of 1 to 10 on these 7 performance measures: responsiveness to needs, equipment quality, reliability, competency of field service personnel, technical support, availability, operational advantages in the field, being able to save time and money, and pricing competitiveness. And what we see here is on a scale of 1 to 10, there's quite a bit of variance between the top performing wireline perforating supplier and the worst performing perforating supplier. We also track how likely they would be to recommend the Net Promoter Score. When we start to track the industry average line, what we find is that the industry average line, which is the black dashed line, is kind of tilting, inflecting down from 21 to 22 for many of these factors, be it responsiveness to needs, equipment quality, reliability, competency of field personnel, and technical support. And we also find that many of these wireline perforating suppliers tend to consistently rate below industry average, like Halliburton, for responsiveness to needs, but equipment quality and reliability for Halliburton is showing a trend of improvement from 2019 to 2022. The reason why I share these graphs with you is I know it's a lot of lines to look at on the screen, but to help highlight to oil and gas operators that based on the feedback of you and your peers, there's no evidence to suggest that all wireline perforating suppliers, and for that matter, we find this across other products and segments in the oil field, not all suppliers perform at the same level based on the experiences that are being received by the oil and gas operators. So I really encourage you to do your due diligence to try to track, benchmark, and monitor supplier performance, not just the suppliers that you use, but also to try to understand suppliers that you don't use to see if perhaps there's an opportunity to find a supplier that can better meet your needs in some cases. When we take a look at the overall value map for North America land, what we find is that some suppliers are in this top left-hand quadrant, like Halliburton, Liberty Energy, which is really the former Schlumberger assets, in a competitively disadvantaged mode, whereas GR Energy is establishing themselves as that premium-based supplier, cost more but worth it, and other regional suppliers like Silvertip are viewed as being value advantaged. The issue is, though, as you start to break this down regionally, you start to see some variations and variances in supplier performance and their competitive position. If you move into the Permian Basin, for example, you can see how strong Silvertip plots along with GR Energy. And as you know, Silvertip was recently announced to be acquired by ProPetro. You see Allied and Caliber and others rate favorably in the Permian Basin as well. When you move into, say, the Marcellus and Utica, a provider by the name of Surefire Wireline is viewed as delivering really strong value along with Dynasty and Renegade, even though Renegade does a lot more case toll than they do pump down. In this case, Schlumberger, or actually Liberty Energy, the former Schlumberger assets, do rate up here in this cost more but worth it quadrant. When you move to the Eagle Ford, however, you see that GR Energy and Allied are viewed as delivering some of the better value, along with some of the other small to mid-tier regional suppliers, and NexTier and Liberty Energy and Halliburton are exhibiting some competitive disadvantages down in the Eagle Ford region. So as you move around from region to region, you do see variances that occur. When you take a look at hydraulic fracturing and wireline perforating, because many of the hydraulic fracturing service providers like to have control of the wireline perforating to try to have greater control of the operations and the efficiency at the surface. What you see here, and you may recall from our August webinar for hydraulic fracturing, Liberty Oilfield Services rates very favorably for hydraulic fracturing in the top right-hand quadrant, but their wireline perforating services have a performance dislocation that they're trying to improve on, and you see the improvement from 21 to 22. When you see Halliburton's frac performance and wireline performance is lining up. It's just kind of lining up in the incorrect quadrant, if you will. Historically, for hydraulic fracturing, Halliburton's always been in the top right-hand quadrant and has only recently been sliding over into the top left-hand quadrant. When you take a look at NexTier's wireline perforating and hydraulic fracturing both line up in the fair value fairway. If you dive into the Permian Basin now, since ProPetro has announced the acquisition of Silvertip, you can see that ProPetro and Silvertip, that combination will be value creative in the Permian Basin. NexTier is the most consistent in the Permian Basin between frac and perf, whereas you start to see dislocations between frac and perf for Liberty Energy, and you see alignment with Halliburton, but again, just on the wrong sides of the value equation map. When you move into the international and offshore markets, what we find is that you don't have 40 different suppliers to choose from. What we find is that the market share is largely dominated by Schlumberger first, followed by Halliburton second, and these two suppliers comprise about 2/3 of the international market, and even more of the offshore market at close to 80% of the market in the offshore arena. When you get into the international land arena, you in fact see, based on the feedback from the oil and gas operators, a differentiated value proposition. Schlumberger costs more but worth it. Halliburton, Baker Hughes, and Weatherford, they don't perform at the same level, but they deliver good value. You get what you pay for. When you move into the offshore market, again, you see differentiated performance and value. Schlumberger's in the top right-hand quadrant, costs more but worth it as a premium supplier. Halliburton and Baker Hughes are also viewed as delivering acceptable value and good value. They don't perform at the same level as Schlumberger, but you get what you pay for, and the pricing is usually a little bit more attractive. As an operator, you need to understand, what type of things are you compromising on in terms of performance when you see these performance dislocations from one operator to another. It's clear that you're not going to get the same level of performance. I think the question really is fit for purpose services as an oil and gas operator. Who can you select that will meet the needs for your operation, and where do you get the best value for you and your shareholders? Tubing conveyed, obviously tubing conveyed is mostly used in the offshore and to a lesser degree internationally, not used North America land. When you look at the tubing conveyed market, you see Schlumberger is well positioned as the premium-based supplier, followed by Halliburton and Baker Hughes, but we see differentiated value. So this is a really nice profile and a good optionality for the oil and gas operators to choose from. When you move to the international land, you see quite a different profile here, don't you? You see that in aggregate, the performance of these suppliers tend to line up in very similar performance in aggregate. What you see is the biggest differences in pricing strategies, where Weatherford and the regional suppliers are really viewed as the lowest price discount providers. Halliburton's the premium supplier, but their performance and their pricing strategies are not really properly lining up to be viewed as an acceptable value in aggregate. Even though they have the majority of the market share, they are at risk of market share erosion over time, and you can see Halliburton's very solidly positioned as a value-based alternative to Schlumberger in the international land market for tubing conveyed perforating. Moving on to completion fluids really quick. Granted, there's 23 different completion fluid suppliers cited as being used worldwide. but that's down significantly from 45 suppliers used in 2017. So we're definitely seeing consolidation taking place in the completion fluids market. When you go to the Gulf of Mexico, Tetra Technologies has a very strong market position. And in many cases, Tetra Technologies is providing a lot of the base product to the big three, Baker Hughes, Schlumberger, and Halliburton. So their actual presence is actually probably a little bit higher than what's reflected here. When you take a look at the performance reviews in the Gulf of Mexico, Tetra Technologies' customer reviews are consistently higher than industry average and consistently higher than Halliburton and Schlumberger MI/SWACOs. And so when you go to the value map, what you commonly find is that Tetra Technologies is typically viewed as delivering one of the better overall values in the marketplace. And obviously Halliburton has the market share. And so Halliburton is a leader in completion fluids in the Gulf of Mexico as it relates to market share, but they don't really demonstrate industry-leading performance, if you will. Instead, their performance is viewed as about being on par with industry norm. MI and Baker Hughes are exhibiting some performance shortcomings and competitive vulnerabilities. When you move internationally, again, the market's really relatively tight between MI/SWACO and Halliburton Baroid. Combined, having about nearly 2/3 of the market, followed by Baker Hughes and then Newpark. The regional providers combine in aggregate about 21% of the market. What we find in the international land market is that Halliburton and Newpark and the regional players are viewed as delivering some of the better overall values. And even though MI/SWACO is the market share leader, they don't always are viewed as in aggregate delivering the best overall value. It can vary by region and it can vary by operator. International offshore, you can see how tight the market has really tightened up here quite a bit. Now, when you go international and offshore, it's very, very common for drilling fluids and for completion fluids to be sold together. So if you look at the drilling fluids market on the left-hand side of your map in the international and offshore markets here, what you find is that Halliburton's performance is declining. In MI/SWACO, Schlumberger's performance is improving. And so you really see MI/SWACO at a competitive advantage over Halliburton for drilling fluids internationally and offshore. But when you go to the completion fluids, you can see that their performance and starting to line up in more aggregate on the horizontal x-axis. But Halliburton has a more aggressive pricing strategy, typically from year to year, positioning them as a little bit more of a value advantage supplier for completion fluids. And so you are starting to see some interesting dynamics internationally and offshore between Halliburton and MI/SWACO as it relates to drilling fluids and completion fluids. You can also see in drilling fluids how Schlumberger's customer loyalty ratings as measured by the Net Promoter Score are consistently tracking higher than the industry average, and Baroids has been on a systematic decline from 2019 to 2022. I think with that, we'll wrap it up. We're about 34 minutes after the hour, and we try to keep these webinars at about 30 minutes to kind of keep them clean and crisp. Again, I'd like to thank all the oil and gas operators that contribute to our research here. Keep in mind, we are doing cementing services and surface wellheads, so if you're involved in that or know someone that is, feel free to reach out. We'd love to have you participate in that survey. The report will come out in January. If you have any specific needs within your oil company, please feel free to reach out to us. We'll be more than glad to collaborate with you to help you understand some of the dynamics that are taking place in the market as it relates to technology adoption, even operational behavior and trends that we see. And then, as you're kind of looking to expand your supplier base, if you will, in some cases, in order to meet your future operational needs, oftentimes it's good to use some of the screening tools that we can help provide you to help point you in the right direction, where maybe you may want to spend some more time in due diligence to do your own research, if you will, to try to identify which suppliers will do the best job for you and deliver the best value for you and your company. With that, again, I'd like to thank you for your participation in our surveys. Thank you for attending the webinar. Please feel free to reach out with any questions, and hope you have a great day ahead and weekend. Thank you very much. Bye now.